Kenya, members of parliament have offered the Central Bank of Kenya express powers to control lending rates of digital mobile lenders under a proposed law that will see the regulator control their products, management, and sharing of borrower information. The Parliamentary Committee on Finance and National Planning approved the Central Bank Amendment Bill 2021 and added a clause that gives the Central Bank of Kenya powers to price interest rates for digital loans. Michael Ogunremi, who is an economist and a fixed income analyst at Chapel Hill Denham, joins me now to discuss further. Michael, good morning to you. Thank you so much for joining us. Let's start with the Central Bank of Kenya. What do you make of them, Parliament giving them such powers to control rate? Because we've been here before. Remember Kenya tried to cap rates on them. Yeah, so exactly. What do you make of that?
Okay, so I think it's, when it comes to the financial service space, regulation is key. Right, regulation is key. What we've seen in Kenya so far is because of the previous interest rate cap that was in place, most commercial banks were unwilling to lend to small and medium borrowers, right? And then the resort for those people then becomes the, digital lender, the mobile money lenders, and all of that. And because they were not regulated, we've had them charging, outrageous interest rates. At some points, you have interest rate trending at about 520% on loans, whereas it's really outrageous, right?
Crazy.
Whereas
insane.
If you get a loan from a commercial bank, you probably pay 12.06%. I mean, it's a huge margin, and so that's what fueled, the CBK to say, I think it's high time that will begin to regulate, the digital money lenders. And I think it's a step, it's a right turn in the right hand. It's a step in the right direction. Okay.
Any chance that things can go wrong if we've got them trying to control the rates? I know the mobile lenders, they've been kind of predatory, if you will. Yeah. So, but can things get out of hand? Where,
Okay, so I think it's all about the policy credibility of the CBK. So for a central bank, what matters is if you are going to regulate, if you're going to regulate market participants, do you keep true to your words? Do you have any shenanigans up your sleeves, or are you just being honest to what you say you want to do? And I think the CBK, in terms of policy credibility, they've done so well. Most times, what they say they want to do is what they actually get to do. So I don't really think, I don't see any downside coming out of it. The only issue I have with it is what is going to happen to supply. Because, like I said, what's led to the growth of this, mobile money lender is the fact that they can't get loans from the commercial banks, right? Most commercial banks are looking for low-risk borrowers, right? So what then happens when you begin to regulate them and then you say, oh, you are not expected to charge, above certain rates? What happens is you then begin to see them aud their supplies, because that way you're sort of like reducing the profit that they make. So that's the only issue I have with it. I think in some ways it's going to affect, the lending to small and medium scale borrowers.
What do you make of the growth in mobile money, though? I mean, I think, in fact, yesterday on our other show, Arise Exchange, 7 p.m. every Monday through Friday for our viewers, we're talking about how mobile money revenue in Kenya has surged like 3.3 trillion shillings half year. Should the banks be worried? I mean, as far as, what do you think?
I absolutely think so. Let me give you a bit of context. If you look at Nigeria, there was a time when, we had this mobile money lenders coming out.
Yes.
And then the banks were, for want of a better word, scared. But what happened was a lot of banks had to adjust. They had to adapt. So what it means is we are going to come into your own space. You understand? And then try and target the same market that you are targeting, right? So, but what is happening in Kenya, to be very honest, I think mobile money is, I think the mobile money in Kenya is about the biggest in Africa.
Yeah.
They're doing fantastically well.
You can buy peanuts on the side of the road with that.
I know, right?
It's insane.
I know, right? Yeah. So it makes a lot of sense for them. But I think that what the commercial banks in Kenya should be doing right now should be to leverage on technology to sort of capture some of this market share, because for them it's a threat. It's a threat, to them. And I think that if they can leverage on technology very well, they can capture some part of that market, and then the whole market becomes much more competitive.
Michael, it's fascinating stuff. I could talk about mobile money for the rest of this show.
I know,
South Africa. I want to ask you about the new finance minister who is saying that the South African financial structure should be, as on the government side, careful of a cycle of dependence with this basic income. What do you make of that matter?
Okay, so I think for South Africa, three things are paramount, right? The first is if you're going to be given unemployment grants, can you afford it as an economy? For South Africa is spending about close to 500 billion rands currently on unemployment benefits. Considering the fiscal stress that they've had because of COVID, I don't think it's the right time to introduce an extra unemployment benefit right now. I think there should be some sort of caution there. The second point will be that if they decide to go ahead with this unemployment benefits, the recipient of the benefits, which are definitely the unemployed people, where would they be putting the money? Consumption or investment? I think right now, if the funds being paid to unemployed people can be channeled towards investment, and I'll give you a very simple model to use. So this is what I think they should do. For those who are unemployed, how many of them have business initiatives? How many of them have business plans, things they want to do with business? Why not put the unemployment grant into fueling those things, into ensuring those businesses get on board? I think that's a more productive use than if you just give them the money and then they just spend it on consumption, right? And then the third point will be, at what point, what exactly is the optimal amount of money to give as unemployment benefits? In my opinion, I don't think you should pay unemployment benefit that is more than the current minimum wage, because it discourages people to work. It discourages people to look for a job, right? Currently in South Africa, the minimum wage is about 3,800 rands per month. So I don't think if the government of South Africa decide that they want to pay unemployment benefits, I don't think they should pay anything beyond that. I don't even think they should pay anything more than 50% of that. I think it should be less than 50% of that to have some sort of productivity.
Very quickly, the riots that we've just seen happen in South Africa, do you think this is a fallout of that, where they're trying to, the income inequality is huge there, high unemployment? Is this talk, this whole conversation, is that trying to quell that happening in the future?
Absolutely. I mean, I couldn't agree more with you. When you look at it, one of the things that causes a riot is when people don't have work to do. When people don't have, gainful employment in their hands, what they resort to is agitation and strife and all of that. So I think, again, that if the government can sort of channel this unemployment benefits in creating more jobs, I mean, instead of even giving the money to these unemployed people, why not use it, to create small businesses for those people to get employed? I think that will go a longer way, and that would sort of like forestall, future riots, happening in South Africa. Great
stuff. Let's move to Mozambique, the insecurity there, the troops. We just played that clip. Yeah. I guess, what's your take on this, the impact on investments? Because Mozambique has this massive 15 billion oil gas project going out there. What do you make of what's happening?
Interesting one for Mozambique. At the outset of the insurgency, I think about 3-4 months down the line, we had Total Energy coming out to say that they are sort of withdrawing, the 50 billion LNG gas expansion, project that they were, currently running. That's an example of how insurgency has affected, the Mozambique economy. And it speaks to the fact that the government has to be much more proactive in managing that insurgency. The port that was recently recaptured was one of the first strongholds of the rebels, right? And I think it's a step in the right direction for the government to try and get that port back, because that's where most exports, most imports, most trading activity, international trade activities happen. So I think for them it's really important, and I love the fact that they are going the route of intra-African military collaboration. It's a good one. Where I normally so when it comes to insurgency and getting foreign assistance, my fears has always been, I like it to be within a region. So most times when you then get foreign hits from bigger developed country, I think that's where the problem comes in, just like the case of Libya, right? But in this case where you have an intra-African military collaboration, I think it's a good one, and I think that they're doing quite well on that.
Great stuff. But overall, insecurity, is that, tourism, investment, it's something that I guess, how big of an issue is it for African nations?
I think it's a serious concern. I think it's a serious concern because on a normal day, I wouldn't want to visit, for instance, I wouldn't want to visit Borno if I was in the UK and I want to, come to Nigeria and explore the north. right? I wouldn't want to go to Kaduna. Same thing too in what's it called in Mozambique. It's about the same thing. There are some areas that are restricted. In fact, as a matter of fact, what happens most times is you have foreign countries issuing warnings to their citizens that don't go to these particular places, right? And so it sort of affects tourism. It sort of affects foreign direct investment. It sort of even affects foreign portfolio investment because there's the make belief that, you know, FPIs are mostly influenced by the interest rate, but I mean, there are macroeconomic sentiment and all of that that also plays into it, right? So I think security, insurgency, and all of that is a big concern for Africa, and it's something that needs to be really managed.
Great stuff. Great stuff. Central Bank of Kenya controlling rates. South Africa talking about basic income debates. Mozambique, Rwanda working together. Intra-African security to quell the insurgency. Michael Ogunremi, macroeconomist, fixed income analyst with Chapel Hill Denham. Thank you so much for joining us. Appreciate your insight.